Hi everyone, welcome to another video. It's Femi Olaniyan here, and in this video I'll be showing you a simple day trading strategy to make up to $2,000 per month with crypto trading. I'll be doing this using the ETH USDT pair as you can see on the screen, and I'll be doing this on TradingView. Now you can do this on any crypto trading app, whether Bybit, Binance or any other crypto exchange app, but I'm only doing this analysis on TradingView, so you can do your analysis on any other crypto trading app. Just follow the steps and everything I'll be talking about in this video. Also, I'll be showing you the best time frame to use for this analysis and the reason why. I will also show you how to set up your indicators. And in this video, I'll also show you how to check for a good entry point or entry signal. I'll also be talking about stop loss and everything you need to know to make this a profitable analysis and a profitable strategy for you. So you can see that there's a lot to learn from this video. So make sure you pay attention and watch this video to the end, so you don't miss any important information. Now, before I continue, if you're new to my YouTube channel, welcome. My name is Femi Olaniyan. I'm a crypto trader and I make videos on crypto, personal finance, and how to make money online. So if you love content like this, kindly subscribe to my YouTube channel and please like this video. We are targeting 2,000 likes for this video, so please help us to meet that target. Thank you. Now, as you can see on the screen, I'm on TradingView and this is the ETH USDT chart right here. But how did I get here? In case you don't know how to get here on TradingView, let me just show you. So right here is the home page on TradingView. So once you go to TradingView and you log in, this is what you're going to be seeing. So the first thing you want to do is search for the crypto you want to trade. So I'll come right here to where I have this search bar right here. I'll click on it. And then this search bar where you have here is where you enter the crypto you want to trade. So for me, for this video, I want to trade ETH USDT. So I'll enter ETH USDT right there, or ETH USD, anyone. Now, once you've done that, make sure that it's on crypto right here. This option is on crypto, and it's crypto we are trading. So you select crypto right there, and then you can see where you have all sources right here. It means which platform do you want to use to trade. So you come right here and search for the platform you want to use to trade. So for me, I want to use Bybit. So I'll just enter Bybit right here. And you can see this is Bybit, so I'll click on it. And then you can see where you have all types right here. So what kind of contract or what kind of trade you want to do. So I'll just pick futures right here. So this strategy is for futures trading, in case you don't know. So once you've selected that, it will bring it out for you. So this is what we are looking for. So this is the trading pair I want to use for this video. So I'll just select it right there. So as you can see on the screen, it has opened up the chart for us. So that's how you can open your chart on TradingView. Now, in case you don't have a TradingView account, or maybe you don't know how to go about TradingView, you can also open this kind of chart on Bybit. Now, let me go to my Bybit account and show you how. So as you can see on the screen, I'm on the home page on Bybit. So you come right here to where you have derivatives, and then you come down here to where you have USDT perpetuals. Then by the right side, you will see some contracts right there. So you see we are doing ETH USDT. So this is it right here. You just click on it, and it will open up the chart for you. So as you can see on the screen, this is the TradingView chart for ETH USDT futures contract on Bybit. So you can see right here, it is on TradingView. So if you want the standard Bybit chart, just change it to standard right here. So when you change the standard, it will show you the standard Bybit chart. So you can see it right here. This is the standard Bybit chart right here. But if you change it back to TradingView, it will show you the TradingView chart on Bybit. So this is it right here. So in case you still want to use the TradingView chart, but you don't know how to use it on the TradingView website, you can also do that on Bybit. So that is how to do it. So let's go back to TradingView. Now we're back on the chart. Now before I go into this analysis, there's something important you need to understand, and that is understanding market trends. Market trends. Now we have three main types of market trends. We have uptrends, we have downtrends, and then we have ranging trends. Now, uptrend is when the market makes consecutive higher highs and consecutive higher lows, while downtrend is when the market makes consecutive lower highs and lower lows. Now, ranging trend is when the market is neither in uptrend nor downtrend. So it's not in uptrend, it's not in downtrend. Now, as you can see on the screen, this is an image showing you the illustration of uptrend, downtrend, and sideways trend. Sideways trend is also ranging trend. So it's also another name for ranging trend. Now, like I said earlier, I said uptrend is when the market makes consecutive higher highs and higher lows. Now, you can see right here, this is an uptrend. So what do I mean by higher highs and higher lows? Now, when you see a candlestick, so let's take this first candlestick, for example. When you see a candlestick, you have the high and you have the low. The high is the top of the candlestick and the low is the bottom of the candlestick. You have to take note of that. Again, the top of the candlestick is the high, and then the bottom of the candlestick is the low. Now, when you have the highs, that is the top, consecutively going up, and then you have the lows consecutively going up also, that means you have an uptrend. That means the market is going up. Now, how do you do that? Now, when you draw your uptrend line has to be going up like this line. Now, when you draw your uptrend line, it is advisable that it must touch at least the bottom of 3 candlesticks. At least 3 candlesticks. Now, you can see right here, this uptrend line is touching this candlestick. It's touching the bottom of this candlestick also. And it's touching the bottom of this candlestick right here. So that's at least 3 candlesticks it is touching. Now, if you look at those 3 candlesticks, if you look at the bottom, that is the bottom of those candlesticks, you can see that they are going up. They are moving up. So you can see that the bottom right here is lower than the bottom right here. The bottom right here is lower than the bottom right here. So it keeps going up right here. That's the meaning of higher lows. That means the lows are going higher. I don't know if you understand that. Now, for the top of these candlesticks right here. Now, you can see the top of this one is lower than the top of this second one and is lower than the top of this one. So that means that the highs are also going up. That means the top of the candlesticks are also going up. So it is so simple to understand. So that is when you can identify an uptrend. So in this case right here, this is an uptrend. So you can just draw your uptrend line right here. So I'll still draw it on the chart so that you can understand. So we just draw your trend line right here. So this is an uptrend. So that means that the bottom of our candlesticks are going up, and then the top of our candlesticks are going up. So that's when they say an uptrend is when the market is making consecutive higher highs and consecutive higher lows. I hope you understand. Now, what of downtrend? Now, downtrend, like I said earlier, is when the market makes consecutive lower highs and consecutive lower lows. So I've explained to you that the top of the candlestick is the high and the bottom of the candlestick is the low. Now, look at this downtrend right here. It is drawn like this. Now, I can see that it is touching at least 3 candlesticks also. It is touching this right here. It is touching this right here. And it is touching this 2 right here. It is touching 4 candlesticks. So this is 1, 2, 3, and 4. Now, if you look at the top of these candlesticks, you can see that the top keeps going lower. So we are having like lower highs. So the high of the candlestick, that is the top of the candlesticks, are going lower. That I'm talking about the 4 candlesticks, the line is touching. So for those 4 candlesticks, the highs are going lower. And also the low right here, that is the bottom of the candlesticks, are also going lower right here. So that's when you have a downtrend. Now, the third trend is the sideways trend. Now, like I said, sideways trend is when the market is neither in uptrend nor is it in downtrend. Now, you can see the sideways trend right here. You can see the market is just going up, down, up, down, up, down right here. So it's not moving in a particular direction. Unlike this upward trend where the market is going up just a little bit down and then went really up again. And like I said right here, the market came really down, a little bit up, and really down again. But this one is just up, down, up, down, up, down right here. So that's what you mean by sideways trend. So you need to understand these trends in the market very well. These trends in the market are very important no matter the kind of strategy you are trading. So it is important to know them. Now, let me go to the chart and show you what I mean by these trends. Now, as you can see on the screen, we have different scenarios of uptrend and downtrend. So let's say, for example, we want to draw our uptrend. So let's look for where we have uptrend that we can draw. We can draw in different places. So let's look at this part right here. You can see this point right here. You have an uptrend from this point to this point. Let's draw our uptrend. So you come right here to the left side of the screen. You click on this icon right here. You can see the small arrow beside it. Just click on it. And then you see different lines right here. Now, I love to use this info line for the trend line. So you can just click on it. So once you click on it, you come right here and you put it on the screen. So you hold it and you draw it right here. So this is our trend line for this, our uptrend line for this. Now you can see this uptrend line is touching about 1, 2, 3, 4, 5 or 6 candlesticks. It's touching the bottom of around 5 or 6 candlesticks. Like I said, it must be touching at least 3 candlesticks. That's the list, at least 3 candlesticks. Now you can see right here that the bottom of each candlesticks are going up. So the bottom of the candlesticks here are lower than the bottom of these candlesticks here. The bottom of these candlesticks here are lower than the bottom of these candlesticks right here. So that means the lows are going higher. So you don't forget that uptrend means higher highs and higher lows. That is, the lows are going higher and the highs are also going higher. So you can see the highs are also the top. So the top of the candlesticks also are going higher too. So that is very, very important. So that is an uptrend. What of downtrend? Let's look for where we can draw a downtrend right here. Okay. So you can see right here, this is a downtrend at this point right here. So let's just put it. So you come to the left side again, click on this icon right here. Once you click on it, come again to your screen and draw your downtrend right there. So you can see that's our downtrend. So you can see right here again that it's touching at around 4 or 5 candlesticks also. And the bottom of these candlesticks are going lower, and the top of these candlesticks are also going lower. So this is how you can identify a downtrend and an uptrend. Now, what of a ranging trend or a sideways trend? Now, you can see right here, if you look at the latest part of the market right here, you can see that the market is just going down, up, down, up, down, up right here. So this area is like a ranging trend or a sideways trend. Or if you check this part right here, you can see the market is moving up, down, up, down. It's not really going up or down, this area right here. So that's an example of a ranging trend. So we have ranging trend or sideways trend. So these are the 3 examples of the trends we have in the market or on the chart. Now that you understand the trends in the market, the next thing I want to talk about is the time frame to use. Now we have different time frames in the market that you can pick a lot. Now on TradingView, to pick your time frame, you come to the top of the screen and you see where you have this 1H right here. That's where you have 1 hour. On your own screen, it might be another time frame that is there, but just click on it. So I'll click on where I have this 1H. That 1H means 1 hour. And you can see right here, you have different time frames. So for seconds, you have 1 second, 5 seconds, 10 seconds, up to 30 seconds. For minutes, you have 1 minute, 2 minutes, up to 45 minutes. And then for hours, you have 1 hour up to 4 hours. And then for days, you have 1 day up to 12 months. So these are the different time frames you have. Now, the best time frame for this, now don't forget, this strategy is used for day trading. This strategy I'm about to talk about is for day trading. Now, the best strategy I would advise you use is between 15-minute time frame to 30-minute time frame, or at most 1 hour. Even though I would advise 1 hour. So some people still use 1 hour time frame for day trading, which is not bad. But for me, I will advise you use between 15-minute time frame to 30-minute time frame. Now, why did I say 15-minute to 30-minute time frame? Now, the first thing you have to know is that don't even try to pick seconds. So if you scroll up, you can see you have 1 second to 30 seconds time frame. So don't even try to pick seconds, because seconds is used for scalping and you are not going to even be able to analyze anything on seconds at all. So I will advise that you pick seconds when you are trading. Now for the minutes, you can see you have between 1 minute to 10 minutes. Now for 1 minute to 10 minutes, to me is also low, because you won't be able to analyze one market activities for the day. Now for example, if you pick 5-minute time frame now, the market can really go up in 5 minutes and really go down in 5 minutes again. So it is not really good to make like good analysis on your chart. And for maybe 1 hour time frame to like 1 month time frame, I won't also advise that. That's for like swing trading. You know, you are going from like 4 hour time frame up to like 1 month time frame. That's even too much. That's for like swing trading. So for day trading, 15-minute to 30-minute time frame or 1 hour, like I said, is okay. So for this video, I'll be picking 15-minute time frame. So I'll come right here, see where you have 15 minutes. I'll change this chart to 15-minute time frame. So our chart is going to change. So you can see we have the new chart right here. So this is our 15-minute time frame right here. Now, if I go on, in case you want to learn the differences between day trading and swing trading, I have a video on that. The link to that video will be in the description below. And also, if you are learning something from this video so far, please help us to like this video. We are going for 2,000 likes. And please subscribe to the YouTube channel if you have not subscribed. I have a lot of different trading strategies I've talked about. Links to those videos will be in the description below. Now, we've talked about trends. We've talked about time frame. The next thing we want to talk about is the indicators we want to use for this. Now, there are 2 indicators I'll be using for this. And the first one is the moving average indicator. And the second one is the Bollinger Band indicator. Now, how do you add your indicators to the charts? Now, to do that, you come right here to where you have indicators at the top of the screen and you click on it. Now, once you click on it, you bring out this search bar where you can search for the indicator you want to use. So let's say I want to use the moving average. I'll just come right here and enter moving average right here. Now, after entering moving average, you will see different types of moving averages right here. See moving average, convergence, divergence, moving average exponential, moving average simple. Now, for this, I'll be using the moving average simple right here. So just come right here and click on moving average simple. So once you click on it, it will be on the chart. So let me click on X. Let me remove this. So you can see on the chart, we have our moving average line right here. So this line is the moving average line. Now, this moving average line right here is kind of thin. Now, if you want to make it bigger, like you want to make it bold, you want to see it more on your chart, you come right here. So you can see where you have this indicator. So this right here, where this cursor is, this is where you'll be seeing all the indicators you have in your chart. So you can see this SMA is the simple moving average indicator. So if you want to do some settings or change some things, just come right here. Just make sure your cursor is on it. Just come right here to this icon right here and click on it. Now, once you are here, you see where you have style. Just click on style right here. And then you see it right here. So this is the moving average. So you can see where you have this blue also with the color. Just click on it. And you'll be able to change the thickness of the line. You can see the thickness of the line right here. So if you want to pick the boldest one or the biggest one, so you can see it has changed on the chart. But I think that's too bold. Let me pick this one right here. So I will be using that one for this. And if you want to change the color, you can change it right here. But I'm not changing the color. So I'll leave it there. Now, the next thing you want to do is to set your time period for the indicator. Now, you come right here to where you have this moving average indicator again. I click on the settings again. And then you come right here to where you have input right here. Once you click on input, you see where you have this length. Now, this length means the period for your moving average. Now, moving average is an indicator that tracks the average movement of that market over a period of time. So, for example, this 9 that is here means that it is tracking the average movement of the price over 9 days, like or every 9 days. But for this, I can just put 20. I prefer to use 20 for this because it is better. Now, you put 20 right here because it is tracking for a longer period of time. Now, that doesn't mean that maybe you are going to be trading for 20 days or this doesn't matter the time. It's only your time frame that matters when maybe how long you are going to be trading. It's only your time frame. Now, this period or this length right here, it helps you to track how the market has performed in the past. So you can be able to use it for your analysis right now that you want to trade. I hope you understand. So for this, I always prefer to use between 20 and 50 because it will give me like more results. So I'll be able to know how this analysis has occurred, whether it has worked in the past so that I can be able to use it and practice it. I hope you understand. So using 9 is kind of small. So you can use like 20, 50. There are some people that prefer to use even 100. So you can have like a bigger picture of the market. So for me, again, I said I'll use 20. So I'll leave at 20 right here and click on OK. So this is for 20. And then the next indicator we are using is the Bollinger Band indicator. So to add that indicator again, I'll come right here and click on indicator again. And then I'll search for Bollinger Band. So you come right here and you search for Bollinger Band. So once you click on Bollinger, you just see this is it right here, Bollinger Band. Just click on it. So once you click on it, it will be on the chart already. So let's check it. So you can see right here is on the chart. So we can see the line is thin again. So let's increase the line. So I just come right here. This is the Bollinger Band. So you can see it has added it. So this is BB20. So just click on this settings right here. Click on it. And then you come to style. And then you can see right here, you have the basis line, the upper band, and the lower band. Now, let me first change all the lines and I'll explain. So let's change all the lines to this one right here, the thickness right here. So let me do the second one right here. Change it to this. And let me do the third one right here and change the thickness to this. So once you change the thickness, then this basis right here is the same line as the moving average. So I'm going to be changing it. The moving average line is blue, don't forget. So I'll change this blue. I'll change it to, let's say, yellow. So I'll put it on yellow right here. And then once you change it to yellow, the next thing is to change the input, the time. So the length for the moving average line is 20. The length for the Bollinger Band is 20 also, but I'm going to be changing it from 20 to 50. So let's change it to 50 right here. So when you change it to 50, you click on OK right here. So you can see everything has changed in our chart. Now, let me explain all of these lines so that before it gets too complicated for you. Now, you can see we have 4 lines on our chart. We have a red line, a blue line, a yellow line, and a green line. Now, the red line and the green line are the upper bands and the lower bands. You know, in the Bollinger Band, we have 3 lines. The red line, the green line, and the yellow line are the Bollinger Band lines. So the upper band is the red line, the lower band is the green line, and then the one in the middle, which is yellow, is the moving average line. Now, the blue line is also for the moving average line, but that one is for the simple moving average line, and that one has a period of 20, and the yellow line has a period of 50. Now, the next thing you want to do is to check for good entry signals. Now, the first entry signal is that whenever the candlesticks go below the moving average line, is a downtrend, and whenever the candlesticks go above the moving average line, it is an uptrend. Now, let me explain what I mean by this. Now, for example, if you look at this area of the chart right here, you can see right there that the candlesticks are going up right here. So let me make it bold. So you can see right here that the candlesticks were moving in a ranging trend right here, a sideways trend. You're just going up, down, up, down, up, down, up, down. And then at this point right here, the candlesticks went above both moving average lines. Don't forget that the blue line and the yellow lines are the moving average lines. Now, the candlesticks moved above both moving average lines. that means that it is a confirmed uptrend right there. Don't forget the meaning of uptrend, higher highs and higher lows. That means that the market is going up. That means we have an uptrend. And you can see at this point right here, after the market finished this ranging trend or this sideways trend, the candlesticks moved above both moving average lines, and then we had an uptrend. So if you make it, let me open it right here. So you can see right here, the market moved from this point to this point. So you can see how high it went. So that is a confirmed uptrend for you. So this indicator also helps you to identify where the market is going up in a trend or when it's going down in a particular trend. So this is one of the simplest and easiest entry signals for this strategy. Now let's look for downtrend right here. Now if you look at this area right here, you can see that the market was moving like in a sideways trend right here. Until at this point right here, the candlesticks came below both moving average lines. So at this point right here, this is a confirmed downward trend. So you can see from this sideways trend, both candlesticks came down, and then from there, it went really down. So if it's that maybe you short right here, or even at this point right here, even if you're not early, maybe at this point, you can still make your money right here. And also, if I come back to the uptrend earlier, you can see right here, if you entered, let's say even at this point right here, you can even make your profit till any point around this point. So you can see it's moved out to this point. So even if you take your profit around this point, you are still in profit. So this is one of the easiest entry signals for this strategy. Again, when the candlesticks move above both moving average lines, it is a confirmed uptrend. And when candlesticks move below both moving average lines, it is a confirmed downtrend. You need to take note of that. Now, the second entry signal for this strategy is that whenever you have a strong sell in the market, ensure you check for reversals with strong buyers in the market or with a strong buy in the market. Now, what do I mean by this? Now, what is the meaning of a strong sell? Now, a strong sell is when you see that big red candlestick that just goes down suddenly. That is a strong sell. Now, for example, you can see at this point right here, you can see that we have this strong sell right here. So let me show you right here. So this is it. After this strong sell, you can see right here, the market was coming down, and then we had a strong sell right here. That is, it really went down. Now, what you should be looking for at this point is a strong buy right here as a reversal. Now, you can see after this, the next candlestick is a strong buy with a green candlestick. A strong buy is when you have a candlestick that has no wick at the top. You can see these tail lines on the candlesticks. All these tail lines at the bottom and top of the candlestick, they are called wicks. So when you don't see a wick line on a green candlestick, that is a strong buy right there. So you can see right here, there is no weak line at the top right there. So this is a strong buy. So the only weak line is at the bottom. So that means that it is weak for sell, but it is strong for buy. So that means that this is showing you a sign that there is high probability that the market is reversing to go to the upside. And I see after the reversal right here, it went up to a certain point right here. So from this point to this point is like 8 to 10 hours of trades. So I'm very sure you cannot be in the market for like 8 or 10 hours. So within like 2 hours or 3 hours, you should take your profit. So if you're taking your profit at this point, is at this maybe in the middle right here that you take your profit. And don't forget, it is futures trading, which means you're using leverage, which means you make more profits. I hope you understand. And in case you don't know how to use leverage to make more profit, I have a video on that. The link to that video will be in the description below. So like I was saying, if you have a strong buy, it means that it is going to the upside, which you can enter the market and long. But let's say, for example, you are scared that, oh, what if it should go up and doesn't come down again? Now, what you have to do here is to wait for it to see if it should go above the Bollinger Band, that is this lower band. If it should reverse back and it goes or enters the Bollinger Band, it means that it's going into the upside. So if you enter the trade right here, you should enter and quickly take your profit within like 2 hours, 3 hours, because this entry signal is not as sure as the first entry signal I mentioned, where I said if the candlesticks move above both moving average lines, it is moving up. So this is not as sure as the first entry signal, but it is an entry signal that has worked so far. So you can use it or try it or even practice it. Now let's take for another example right here. Now let's say for this example is if you want to short right here. So like I see right here, for this one, you have a strong buy right here. This is a strong buy right here. This strong buy is showing you that the market, a lot about buying the market. Now the next thing you want to be looking out for is a reversal of strong sell. Now you can see right here, we have a reversal right here. Let me make it bold so you can see it well. So you have a strong sell right here with a reversal. And from that strong sell, if you say maybe, oh, I don't trust it, let me still wait for it. You can wait for it to enter into the Bollinger Band. So you can see it went below the upper band. This is the Bollinger Band, the red line. It went below the Bollinger Band. That means that it is going down. It is confirmed that it is going down. So you can see right here, you can short right here. And you can see we even have a double confirmation right here because the candlesticks even went on to go below both moving average lines. So that means that we are sure that this market is going down. So it's either you enter somewhere at this point, or if you are not sure, can wait for it to enter below both moving average lines and enter your trade. And if you entered right here, you can even see, let me make it, you can see right here, the market went really, really down. So if you enter your trade right here, you can take your profit anywhere right here and make good profit for yourself. So these are good entry signals for this strategy that has worked a lot of times for me. And if you practice it, it will definitely work for you. I'm 100% sure. Now, one thing you need to know is that you won't win every trade with this. That's why I said you need to practice. The more you practice, the more you will see what works for you in this strategy. But one thing I'm sure is that if you do this 10 times, you are definitely going to be winning at least 6, 7, or 8 trades out of every 10 trades. So I hope you understand all of this. Now that we understand the entry signals, and maybe you want to practice this. So let's, for example, you want to practice without your money. You want to use your money. You want to use like demo trading. I have a video on how to do demo trading on Bybit and even Binance. So if you want to try it on any of that, I'll put the links to the videos for demo trading in the description below. So you can watch the videos and practice with demo trading with this. And maybe when you know you are good, you can now use your money. I hope you understand. Now, in case you watched to this point, please drop a comment in the video below telling me you are learning something. I want to know if you are really learning something from this video. And please like this video and please subscribe to the YouTube channel. Now, the next thing we want to talk about is using stop loss for this. Now, for this strategy, I will really advise you to use stop loss. It is very, very important. Now, if you've practiced very well, let's say you've learned this thing, you've practiced very well, and you're sure that, oh, you can be having like, let's say 70% or 80% accuracy in your trades, then you need to use stop loss so that you can be on the safe side. Now, what do I mean by this? Now, let's, for example, you take 10 trades and you're winning, let's say 7 out of 10 trades. You are still a profitable trader. And I'll also be advising you to use like, let's say 1 to 2 risk to reward ratio. Now, what is the meaning of this 1 to 2 risk to reward ratio? This means that, let's say, for example, you are risking $50 for your trade. It means you are planning to make $100. So that means that if you take the trade, it goes according to your plan, you make $100. If it doesn't go according to your plan, you lose $50. So if you do that and you're winning 7 trades out of 10, you are definitely going to be profitable. Now, in case you're still doubting this, I'll show you a calculation to show you how much you can possibly make with this strategy and with this calculation in a month. So again, I said out of 10 trades, if you are winning 7 or even 8, you are still profitable if you use the calculation I will be showing you at the end of this video. Now, one more thing I need you to know is that this is a day trading strategy. Always ensure to close your trade before the next day. It is very, very important. Always ensure you close your trade before the next day. Now, this is not a compulsory thing, but I always advise people to do this. This is because you are using a very short time frame. You are using a 15-minute time frame or even 30-minute time frame. And this doesn't support leaving your trade for days. You should end your trade after a maximum of, let's say, 12 hours, 16 hours. It shouldn't be up to a day. That's just the main thing. And like I said again, it is not compulsory. Now, so far in this video, we talked about trends, we talked about time frame, we talked about entry signals, we talked about stop loss. Now, the next thing I want to show you is a calculation to show you how much you can possibly make from this strategy in a month, or you can even make up to $2,000 every month. Now, to do that, you come to this website called winrate.io. Now, this is a website that you can use to calculate how much you can possibly make from a strategy. As you can see right here, there are some things you need to enter right here to calculate this. Now, the first thing you have to enter right here is your starting balance in dollars. That is how much you want to use to start this strategy, this trade. So I'll be using $1,000. So it's already on $1,000. I'll leave it right there. Now, the second thing is, what is your win rate? That is, out of all the trades you want to take, how many percentage you want to win? So I'll leave it at 60. So let's say, for example, I'm taking 10 trades. That's out of 10, I want to win 6. That's actually the lowest. Like, you can possibly win more than 6. So that way you can possibly make more than what I will calculate here. So let's say you're even winning like 7 or 8 out of 10, you can possibly make more than this. So I'll put 60 right there. Now, what is the take profit percentage you want? Now, for this take profit percentage, I'll leave it at 2. And for the stop loss, I'll leave it at 1. Like I said, remember I said use 1 to 2 risk to reward ratio. Now, what does it mean? Does it mean that you're making 2% profit and 1% stop loss? No. Remember that this is futures trading or derivatives trading. You are going to be using something called leverage. Again, I said, in case you don't know how to use leverage to make profit, I have a video on that. The link to that video will be in the description below. So like I was saying, you are using leverage for this. So that means that for every percentage the market moves up, you multiply it by the leverage you are using. So for this video right here, I'll be putting the take profit percentage as 2, the stop loss at 1. So let's say, for example, my leverage is now 10x leverage. That means that if I make profit, that will be 10 times 2, which is 20%. And if I lose, that will be 10 times 1, which is 10%. So I hope you understand. So that means that the higher the leverage, the higher the profit. And also, don't forget, the higher the risk. Remember, the higher the leverage, the higher the risk, and also the higher the profit. So I don't advise you to use more than 30x leverage, but I will still get to that. So we've entered 2% as the take profit and 1% as the stop loss. Now, the next thing is the number of trades. Now, let's say, for example, in a month, we have like approximately 30 days in a month. So let's say, for example, I don't want to trade every day. So let's say I want to trade 20 times in a month. So let's say 1 trade per day, and let's say for 20 days. So let me enter 20 right here. So I don't want to do too much. Now the leverage, so I just finished talking about leverage. So for leverage, I'll use 10. So again, I won't advise you to use more than 30. Even 30 is high, but I will never advise you to use more than 30. You can just use 10x leverage for this. So that means that for 10x leverage, if I make profit, that's 2 times 10, that's 20% profit. If I lose, that's 1 times 10, that's 10% loss. So you can see right here, the next thing is to pick the exchange you're using. So for me, I'll be using Bybit. So you leave it on Bybit right there. And once you pick Bybit, it will show you the fees right here. So those are the fees you'll be paying for everything you'll be doing in the market. So after you've picked all of that, the next thing is you just click on Run Strategy. So I'll click on it. So you can see our breakdown right here. So you can see our win rate is 60%. Number of trades is 20. Wins is 12. So we are going to win 12 trades out of 20. And we are going to lose 8. And the total amount of money we are going to make from this is a little bit above $4,000. And the total amount of money we are going to lose is about $1,600. And the total amount of fees, you'll be paying trading fees, don't forget. So you'll be paying about 346 trading fees for all your 20 trades. And then the total profit you'll be making is $2,191. So you can see with this simple strategy, you can make $2,000 every month if you are starting with $1,000. So by that means, if you start $1,000 and you make profit of $2,100, at the end of the month, you will have $3,100. And at the bottom side, it will also show you all the trades. Like you can see the 20 trades right here. So these are examples of all the trades. So this strategy right here, or this calculation is showing you that, let's say the first trade, number 1 trade, let's say you lose the trade. This is the fee you'll be paying. You'll be paying $15 and then you lose $115. So that's when your money will come back to $885. Then the second trade, let's say, for example, you lose it again. You lose $102, money will come back to $783. Now, in the third trade, let's say you win the third trade and the fourth trade. You win both. Now, your money will come back up to $1,118. Now, let's say the next 2 trades, that is number 5 and 6, you lose both of them. That means your money will come down to $876. Now, let's say, for example, the next 4 trades, you win the next 4. And your money will come back to $1,786. Now, let's say, for example, you lose this next trade again. That will be $1,581. And if you do that up to the last trade, you will be having $3,191 at the end of 20 trades. So you can see right here, this is a good calculation right here. This is a good strategy that you can use to make money for yourself. So this is a simple strategy for beginners to win more trades. And if you've learned something from this video, just type "I have learned something" in the comment section below. And don't forget to also like this video and subscribe. And to learn more trading strategies on my YouTube channel, check out this playlist on your screen right now. Thank you for watching. I'll see you guys in the next one. Bye.